Hey, it's Mike Berner, finance writer for business.com. In this video, we'll discuss payroll audits and how they can prevent your business from losing money. So stick around and don't forget to like, subscribe, and check out the links in the video description for more small business content. An audit of payroll involves reviewing your company's payroll system and procedures to confirm their accuracy. This process involves verifying your employees are receiving the correct salaries and that payroll withholding and deductions for benefits are being handled correctly. The goal of a payroll audit is to ensure that your company is properly managing its payroll processes. Step 1. Review all employees on your payroll. Are there any names that no longer belong on the list? Are there any names that are missing from the list? Are there any names that you don't recognize? If you find an employee on your payroll that you don't recognize, it is important to conduct a thorough investigation. Additionally, if you see that an employee who is no longer with your company is still receiving payments, you may need to take steps to recover the money. It is important to address these issues promptly to avoid losing money unnecessarily. Step 2. Check all numbers. Check the pay rates of all employees to ensure that they are correct and that any recent changes, such as raises or switching from hourly to salary pay, have been reflected in the records. It is also important to verify the number of hours worked per pay period for each employee and ensure that paid time off, such as vacation days, has been properly recorded. In addition, the total pay of each employee should be calculated by multiplying their wages by their total hours worked. And the total hours worked should be the sum of all hours worked per pay period. Step 3. Account for vacation time. Look at all your employees' days off to ensure they are labeled properly. They should be separated for paid vacation, unpaid vacation, personal days, sick leave, parental leave, or bereavement leave. The latter three categories may be paid or unpaid. Step 4. Examine other payment records. Your payroll system isn't the only place where you've recorded your employee payments. Payroll disbursement is also reflected in your ledger and bank account. The numbers in all three areas should match. If you find discrepancies, you'll need to do a deep dive into your records. Step 5. Analyze your tax reports. When you pay employees, you must withhold income, Medicare, and Social Security taxes. Your payroll software should handle this task and have timestamped records of these withholdings. So how frequently should you perform an audit? Well, you should conduct a payroll audit at least once per year. However, there are benefits to auditing your payroll more frequently. Twice a year is good. Quarterly is even better. Bottom line is, the sooner you catch the errors, the less time and money you'll spend correcting them. Of course, all this is a lot easier if your payroll software integrates with your accounting software. Now, one easy option for many small business owners is to use QuickBooks Payroll. Chances are that you're already using QuickBooks for bookkeeping, and the company offers package deals for the payroll software. The two services seamlessly integrate with one another, so you never have to manually enter data into both programs. This dramatically reduces the errors that can accompany copying data from payroll software or, God forbid, spreadsheets into an accounting program. Now, if you're interested in learning more, be sure to check out the best online payroll services guide on business.com. Our team compared all the top options, and we regularly update this guide with any new developments. Finally, if you learned something from this video, hit that like button and subscribe. We're always putting out content for small businesses, and definitely let us know what you think in the comments. See you next time.